Okay, class, welcome to week 3, assignment 2's homework problems. So we're going to have 4 different problems. 5 will be from chapter 5 on merchandise inventory, and 1 will be on inventories, chapter 6. You'll have FIFO, LIFO example, and that's the first in, first out, last in, first out. Again, these are just costing methods. It's not the actual value of the inventory. Actually, the ending inventory will be the value of the inventory, and what we want to find out is the most important. When we make a sale, we find out the cost of goods sold. So it's not the actual movement of goods. So you can still have first in, first out, or last in, first out for a food business. Obviously, we don't serve our food last in, first out, but we can actually account for the actual inventory as far as the cost of goods sold and the value for that. So don't forget to download your Excel spreadsheet right over here. So I'll pop that open, and the first problem that we're going to have is a simple single-step income statement. So it's for a Lumiere company, and here's all your information over here. And what we're going to do is just jot it down here. It's not a hard problem, but you can have you can see illustrations in the textbook in chapter 5 that gives good examples. So for the revenues, we're going to add the sales, the net sales, and interest revenue here. And let's go ahead and total these figures. And how you do that is just hit the plus sign, left mouse, plus sign, left mouse, enter, and that'll automatically add up. See, there's a formula. Same thing, do that with total expenses and with net income. That's a pretty easy problem. The next problem is P53A. You're going to create an income statement, and this is going to be a multi-step income statement. Same chapter 5, you'll see an example. So you can have sales revenue minus cost sales, returns and allowances equals net sales, minus cost of goods sold equals gross profit. That's how you get the gross profit. So if we're going to calculate this, so this is given, and net sales most likely not given, but you're going to subtract returns and allowances from sales revenue, and your gross profit will be this figure minus this figure. So if you double click on it, it'll actually show you those two cells. So you can end up your operating expenses, and you'll get total operating expenses, which will be the addition of all these together. And you can do a sum function in Excel, the top right hand corner. Then you'll get income from operations, then you add other revenues and gains, and subtract any interest expense, other expenses and losses, and you'll get to net income. Take this figure, and this is going to be the net income figure right here. So in the problem, it gives you owner's capital beginning. So we're going to add net income, we'll get this figure, subtract your earnings, and then we'll have our ending balance. Take this ending balance, and that's going to be our owner's capital. So that's going to go right here. So remember, in your balance sheet, your total liabilities and equity will always equal your assets. If that doesn't match, there was something wrong. So these total current assets are going to be this, the cash plus accounts receivable plus inventory plus prepaid insurance, add plant, property, and equipment, and then you can have equipment less accumulated depreciation. This number is going to be this number minus this number, and we're going to add these figures, and we're going to get total assets. Same thing with current liabilities. You have 3 here, give a total here. Your long-term liabilities is nothing there. That's just a section for these two. And then add your owner's capital. So your total liabilities plus total owner's capital is going to be basically the same number as the assets. So that's P5-3A. Just do part A there. Problem 5-5. This is a worksheet, and we basically did something similar last week, and we actually just started last week. We started with the adjusted trial balance. Here, it comes all the way down. So here, we're going to actually do the trial balance. So take the trial balance information. These two are going to match. Then we're going to do adjusting entries. So I labeled these like A, B, C, and D. Make sure like they correspond. I tried to make it a little bit easier for you. So if A is going to include supplies and supplies expense. So for this example, whatever the so here we go. Supplies on hand equals $2,000. So that means we use something. That's going to be our ending amount. So if we go to supplies over here, it's actually 6,200. That's what we started with. But now we have on hand 2,000. So the difference is going to be 4,200. That's going to be part of your adjusting entry. So that's going to be A and A. So you can have supplies expense 4,200. See, this is the debit column. Then supplies we're going to credit because we've used it. That's A, B, C, and D is basically 1, 2, 3, and 4. So sorry about that. A is 1, B is 2, and so on. So with the trial balance, do your adjustments, then have the adjusted trial balance. These are going to match. You know what? Let me see something. I'm actually going to pull up another form, so bear with me. Okay, so we're going to have our adjusted trial balance. From our adjusted trial balance, we're going to make the balance sheet here and the income statement here. So I'll make it easier for you because you can basically know that whatever is in here is going to belong on the income statement. See how it starts with sales revenue and the balance sheet ends at drawing, and then you have capital. So just a check figure over here is going to be 972,700. These two figures, that's your check figure. Your check figure for your adjusted trial balance, so it's columns K and L. Right there is going to be 988,200. And I'm not sure if you realized from the last time when you did a worksheet, you had this was highlighted and this was highlighted. That means we had a net profit. Now you can tell from here they're both in. It's actually going to be a net loss. So your net loss is going to be the difference between your revenue account minus your expenses. So that should actually equal 2,200. The bottom figures here, these should your check total should be 757,400, and this is 233,000, so 233,000. So give that a try. There's plenty of examples in the textbook, and after looking at this video, if there's any problems or questions, definitely post in class. Your last one has to do with inventory, your last problem. So let's go through this really quick. There's 3 purchases. The inventory ending balance is the next month's beginning balance. So we had 30 units at $8, which equals 240. That's how I got the 240. May 15th purchases, 25 units at $11 equals 275. And likewise over here in May. So 65 units were sold in May. So that means that there's 25 units left in ending inventory. So what we want to do is find cost of goods available for sale, which is this. 935. That's your actually total cost goods available for sale. So whatever we sell, the leftover is going to be this minus, the 935 minus this, and that'll be ending inventory. But think about it. We want to find cost of goods sold. So cost of goods sold for the first in, first out. So the first in was the first one out. So if we sold 65, the first one in was this. So we need to have 65 units. So we're going to basically have, we'll put the May one here, 30 here, 8 here, and that's going to equal 240. So we subtract 30 from 65, we get 35. So we need 35. So then you'll have 25 at 11 and 5 at 12, and that should give you a cost of goods sold under FIFO. And the difference, the ending inventory, is going to be 935 minus whatever this is. Same thing here, but LIFO. So last in, first out. When you have 65 units, so you can have 35 times 12 is 420. 35 So we're going to need 25 more here, and there's some remaining here that you're going to do. So basically, this 8 will be down here. So you just flip-flop it. Just remember, first in, first out. Cost of goods sold, we're going to start here. Last in, first out, we're going to start here. So look at chapter learning objective 2 in chapter 6. Illustration 6.6 should give you a good example. As far as 5.5a, it's a great illustration from chapter 4's worksheet. Again, I had mentioned that in the beginning. Look at chapter 4, and it actually gives you a couple of great examples in the text in that chapter. 5-3a, chapter 5, learning objectives 4 and 5. Check that out. Look at illustration 5-14 and owner's equity and balance sheet. Those statements you can look from prior chapters. So here's your owner's equity statement, and here's your balance sheet. And the first problem, E510, again, it was a simple one. So look at learning objective 5, chapter 5, illustration 5-15. Any questions, just let me know.